Hello and welcome back to USA Senior News. If your Social Security deposit has ever come in smaller than you expected, and you weren't quite sure why, this video is for you. There are 7 specific things that can quietly reduce your check before it ever reaches your bank account. And by the end of this video, you'll be able to look at your own deposit and know exactly which of these 7 might be affecting you, and more importantly, what you can actually do about each one. Some of these you can fix immediately. Let's go through all 7, in order. Number 1. Your Medicare Part B premium. This is the single most common reason a check comes in lower than the announced COLA would suggest. If you're enrolled in Medicare Part B, your premium is deducted automatically from your Social Security payment before it's deposited. For 2026, the standard Part B premium is $202.90 a month, up nearly $18 from the year before. So if your COLA added $56 to your benefit this year, but your Part B premium also went up by roughly $18, your actual net increase was closer to $38, not the full $56 you may have expected from the headline percentage. The fix. There isn't one, exactly, since this is a standard, required premium for anyone enrolled in Part B. But understanding this helps you correctly interpret your benefit letter and compare your gross benefit versus your net deposit, rather than assuming something is wrong. Number 2. IRMAA, the income-related monthly adjustment amount. If your income was above a certain threshold, currently $109,000 for an individual or $218,000 for a married couple filing jointly, based on your tax return from 2 years prior, you pay more than the standard Part B premium, sometimes significantly more, and this also applies to Part D prescription drug coverage. Here's what a lot of people don't realize. IRMAA is based on income from 2 years ago, which means if your income has dropped since then, due to retirement, the loss of a spouse, or a one-time event like a large capital gain that year, you could be paying an inflated premium based on outdated income information. The fix. If you've had one of these specific, life-changing events, you can file for an IRMAA reconsideration directly with the Social Security Administration, using a specific form, to have your premium recalculated based on your current, lower income. Many people who qualify never file this simply because they don't know it exists. Number 3. Your Medicare Part D premium. If you have a standalone Medicare Part D prescription drug plan, and you chose to have that premium deducted directly from your Social Security check for convenience, that comes out automatically each month as well. This is optional. You can also choose to pay your Part D premium separately by bill, but many people set it up as an automatic deduction years ago and forget it's coming out of their Social Security deposit specifically. The fix. Check your annual notice of change during open enrollment each fall. Part D premiums vary plan to plan, and switching to a lower-cost plan with similar coverage is often possible and can meaningfully reduce this deduction. Number 4. Voluntary federal tax withholding. Here's one that surprises a lot of people. Social Security benefits can be subject to federal income tax, depending on your total income, and many recipients choose to have a percentage withheld directly from their check, similar to a paycheck, to avoid a large tax bill at the end of the year. This is completely voluntary, using a form called a W-4V, but once it's set up, it continues automatically every month until you change it. The fix. If your income situation has changed and you're now withholding more than necessary, you can file a new W-4V at any time to adjust or stop this withholding. It's worth reviewing this annually rather than assuming the original amount is still correct. Number 5. Overpayment recovery. This is one of the most frustrating deductions for a lot of seniors, and it can catch people off guard even years later. If the Social Security Administration determines at any point that you were overpaid in the past, even due to an administrative error that wasn't your fault, they can begin withholding a portion of your current monthly benefit to recover that overpayment, sometimes with little advance warning. The fix. If you receive an overpayment notice, you have real options. You can request a formal appeal if you believe the determination itself is incorrect, or you can request a waiver, which asks Social Security to forgive the repayment entirely, particularly if the overpayment wasn't your fault and repaying it would create financial hardship. Many people don't realize waivers exist and simply accept the reduced check without ever asking. Number 6. Garnishment for court-ordered debts. Generally, Social Security benefits are protected from most private creditors, meaning a credit card company or medical debt collector typically cannot garnish your benefit. However, there are specific exceptions where garnishment is legally allowed, including court-ordered child support, alimony, and certain federal debts like unpaid federal taxes or federal student loans in default. The fix. If this applies to you, the underlying court order or federal debt itself is what needs to be addressed, rather than the deduction on your Social Security statement. It's worth confirming the debt amount and status directly with the agency or court involved, since these balances and required payments can sometimes be renegotiated. Number 7, and this is the one that surprises people the most, the earnings limit, if you're still working while collecting benefits before your full retirement age. If you've claimed Social Security before reaching your full retirement age and you're still working, there's an annual earnings limit. For 2026, if you earn above that limit, Social Security withholds $1 in benefits for every $2 you earn above the threshold, and it's a higher, more forgiving formula in the specific calendar year you reach full retirement age. Here's the part people often don't realize. This isn't a permanent loss. Once you reach full retirement age, Social Security recalculates your benefit going forward to credit you for the months that were withheld, meaning your monthly benefit actually increases afterward. But in the short term, seeing a smaller or even completely withheld check because of this rule can be alarming if you don't know it's happening, and that it will be accounted for later. The fix. If you're working and collecting benefits before full retirement age, it's worth estimating your annual earnings in advance and understanding exactly how much of a reduction to expect, rather than being surprised by it, and knowing that it's a deferral, not a permanent cut. So, to summarize all 7, Medicare Part B premiums, IRMAA surcharges, Part D premiums, voluntary tax withholding, overpayment recovery, court-ordered garnishment, and the earnings limit if you're still working. Every single one of these is a completely legitimate legal deduction. None of this is fraud or error on Social Security's part. But understanding which ones apply to you is the difference between panicking over a smaller check and knowing exactly why it looks the way it does, and in several of these cases, actually being able to reduce or fix it. My recommendation? Pull up your most recent Social Security benefit letter or your online My Social Security account and compare your gross benefit to your net deposit line by line. If you see a deduction you don't recognize, you now know exactly which of these 7 categories to investigate. Before we close, one important warning. If you ever get a call, text, or email claiming you owe an overpayment, or asking you to verify your account to stop a garnishment, and demanding immediate payment or personal information, that is almost certainly a scam. The Social Security Administration communicates overpayment and garnishment matters through official mailed letters or your secure online account, never through an unsolicited urgent phone call or text demanding immediate action. If this video helped you understand your own deposit a little better, consider subscribing to USA Senior News. We cover Social Security, Medicare, and retirement updates like this every week, explained simply, with no confusion and no fluff. Stay informed, and we'll see you in the next video.